Spot price, pegged currencies, floating exchange rates, what do they all mean? And how do they impact your money? If you've ever been confused by currency markets, we break it all down in simple terms. And at the end, we'll give you a simple trick to quickly analyze any currency pair like a pro. Stay tuned.
Moving to our fifth segment, we do an investor education segment, talking about all sorts of different components of investing, what to know, getting advice on how to start a career, or just understanding what certain terms means. Gary, today we're talking about understanding currencies, how to read them, spot, pegged, floating. Thing number 5, Gary, how to read currencies. What I want to start is, tell us, what do you mean by reading currency prices?
So that can be really confusing. And often different terms and numbers get thrown around, making things even more confusing. In some currency pairs, they're typically quoted with the dollar as the base currency. Other times it's the reference currency. And so we end up in this weird situation where, for example, when we see the Japanese yen going from 140 to 150, is that higher? Is that lower? What does that mean? And that actually means the Japanese yen is weakening against the dollar. But in other situations, when the number goes up, it would mean that currency is strengthening. So the way these things are quoted is often confusing for people. And sometimes the language used around these things is not designed to be, you kind of need to know what they're talking about as opposed to being properly descriptive.
And then, Gary, there's some of these terms and go through a couple, but the first one I want to talk about is the spot price. What's the spot price when it comes to currency?
Yeah, so that's just a fancy finance way of saying it's the real-time market price of a currency. So, think about it this way. If you want to go into the stock market and buy shares of NVIDIA or shares of Tesla, whatever the current price is, that would be the spot price. It's not a futures price. It's not an options price. It's not the price down the road or for some sort of swap contract. The spot price is just the price as it is right now. To even further simplify it, let's imagine, Rob, we got on a plane and we went to, Japan, and let's take a quick look right now. And so right now, the exchange rate is 149 spot 17. So if we flew to Japan right now, and we, got to the airport, we handed them $1, they would give us 149 yen. Now, yeah, there's going to be, they'll want a fee, and, there'll be some slippage on, because the currency changer will want to take some money as well themselves. But that's the way to think about the spot price would be if you went to that country, what would you get for your dollar?
Next one I want to shift to, Gary, is pegged currency. So I know we have something to do with price stability here. But what can you tell us about pegged currency and how you look at it?
So some currencies float, but a pegged currency, they are typically pegged to the value of another currency, often the US dollar, meaning their price remains stable rather than fluctuating due to economic factors. It reduces volatility, it increases price stability. So, just to give you an example, the US dollar versus the Belize dollar is fixed at 2 Belize dollars to the US dollar. So if we go to Belize today and we give them $1, they will give us 2 Belize dollars. If we go tomorrow, they will give us 2 Belize dollars. If we had gone a year ago, they would give us 2 Belize dollars. So that is fixed. Now, there's also a hybrid situation where sometimes countries will let their currencies float within a range. China did that for a long time. Their yuan price, they'd be between 6 and 7. And if it was, if they started to drop below 6, they would, reduce the value of their currency. If it started to go, actually, I said that the wrong way. No, that was right. Like I said, it can be confusing. Above 7, they'd start to strengthen the currency, right? See, it really can be confusing. But they'll sometimes there's a range. So that would be a hybrid situation.
Gary, you mentioned too float currency, and the last term I have here is floating currency. I know there's fluctuations involved, but how can I wrap my head around that if I was a beginner intermediate investor on what floating currency actually is?
So, floating currency is the most common situation. And all that means is that the market will set the difference in the price between different currencies. So that's what we've seen in Japan. Just a few years ago, you would receive 102 yen to the dollar. Now, since then, the yen has weakened substantially and the dollar has strengthened, largely because the Bank of Japan has kept their interest rates insanely low. They're starting to come up now. And the US Federal Reserve hiked rates much more aggressively than other central banks. Now, in my opinion, they didn't hike aggressively enough, but that's been the subject of a lot of debate. That caused the value of the yen to plummet from 102 to the dollar to, at one point, it crossed over 160 to the dollar, and right now it's around 150. So what that means is that the value of the Japanese yen versus the dollar has fallen by about 50% in the last few years. So these prices can float, and there are dangers on either side of it. So, for instance, if you let your currency float, you run the risk that the international markets will change, and all of a sudden, if your currency gets too strong, your exports won't be competitive. If your currency gets too weak, imports will become expensive. Now, you don't want either of those things to happen, but at some point you gotta pick one, right? You can't have both. The important thing to know is that there are dangers with fixed exchange ratios as well. So those will offer stability for economies reliant on trade. But the key thing to remember is that in order to maintain a practical fixed exchange rate, the country trying to keep the peg, in the case we gave, Belize, they need to be careful not to issue too much currency. And it's also a reminder they won't have the ability to control their own interest rates. So basically, what I'm telling you is whether you're fixed, whether you're floating, whether your currency is strengthening or weakening, there are benefits and risks either way. And I guess the conclusion we can draw is even in the sovereign currency market, there's no such thing as a free lunch. You kind of need to pick your path, and there are benefits and risks no matter what path you choose. Hopefully, this helps. But it's really important to note that currencies and discussions about currencies can be very confusing. There are a lot of moving parts. These things are often quoted in ways that are not intuitive. So, what I'm hoping is that this explanation was helpful to you, the audience. But if it wasn't, if you have questions, if some of it was confusing, if some of it doesn't make sense, either put a question in the comments or use the Ask Gary feature on the website. This is one of these things that we may need to cover multiple times to make it clear to people.
Great stuff, Gary, and appreciate you breaking that down for us. And again, any questions that you might have, please reach out to us. It's a huge piece of what DKI provides. It's just general knowledge across the board, deep dives as well. Gary hits the investing angles from every direction and as shallow or as deep as we need to go based on the competency of the individual investor. That concludes this week's version of the 5 things, the sort of deflation issue. We'll be here same place, same time next week. Gary, I forgot to mention, and I would virtually pinch you, but you're not wearing green, and it is St. Patrick's Day, so please note that. If anything, give Gary a thumbs down in the comments for that one.
Right. There should be a penalty for such insolence.
Yeah, exactly. So, but yeah, Gary, great stuff as always. Check us out at the website, deepknowledgeinvesting.com, Instagram, LinkedIn. Gary's active on X as well. You can really find us anywhere or just reach out via the website as well. Would love to talk and network with everybody that's listening. Gary,